So this is the second day of these presentations that we're doing here in the Pell Room. So this one focuses on sort of tech giants and fintech, largely focused on Amazon and a view into sort of demystifying what they're doing across financial services. We also look a little bit about the fintech startup landscape as well and sort of a state of the union there. This pairs nicely with another briefing we do later in the day on sort of how big banks are creating playbooks in fintech as well. So we look at the JP Morgan, Goldman Sachs, and what they're doing in digital finance. So they pair nicely together as well. So just to get started, when we think about sort of the two big threats that we continue to hear about affecting financial services incumbents, it's really startups and big tech, right? So if you look at the headlines across the last 5-6 years, you'll see headlines like fintech startups putting banks under pressure, fintechs are not a threat to banks, but Amazon and Alibaba are, why the banking industry is not afraid of Amazon, continually sort of trending in the media around sort of what financial services incumbents, banks, insurance companies, et cetera, should be worried about. So let's start with sort of the first part of that, which is fintech startups. Where we believe we're headed is that fintech is now sort of entering a new age, sort of an age of scale, as investment is now flowing much more into companies entering their next act. Here we're referring mostly to consumer-facing fintech companies. Many of the companies here at the conference, such as Credit Karma, Wealthfront, Robinhood, and others globally, including Nubank and many others in Asia as well. We're starting to see these companies start to add new product lines, iterate and execute much quicker than they have in the past as they accumulate more users, more data, and able to launch into other areas. What we've noticed is that becoming a breakout sort of consumer company is harder in fintech now. If you look at the US App Store, for example, all 21 of the top 100 apps that are sort of operated by venture capital-backed startups and rank in the top 100 were actually the same apps that were in the App Store last year, meaning that it's a little bit harder to break out. And you'll see some familiar names here across different categories like credit scoring or savings and investing, companies like Acorn, Stash, and micro investing and others. So we haven't seen as much sort of newer companies, newer fintech innovation, at least from the startup side. But we are seeing companies sort of execute into other product lines as we hear sort of bank startups enter into checking accounts or adding sort of new wealth products, and that's something we expect to continue. So this quote by Index Ventures general partner Jan Hammer is a good one, I think. He mentions that the evolution of financial services over the coming decade will be driven by new, beautifully designed products, new revenue models, and ultimately sort of free to the end user. So when we talk about free, that's certainly a theme that we've seen executed by a number of companies over the last few years. This is a chart of the biggest fintech investments in the consumer sector this year so far. And what we've seen is there's sort of a big shift recently into mega rounds, into sort of perceived winners. If you look at early stage funding to consumer fintech, we don't have the chart sort of here, but it's actually trending downward in terms of the number of deal volume. But we have seen certain companies, for example, use free to accumulate and acquire customers very quickly. Kenneth Lin, who just spoke at Credit Karma, talks about sort of how they used free credit scores to scale into a user base of about 80 million users and now adding other product lines. Robinhood, who we had yesterday, using free trades to grow into a user base of about 4 million customers. And you see other companies here as well, Revolut, Nubank, who will be speaking later here today as well. So let's look at a couple of those startups. So Revolut, for example, is a good example of this. They use sort of free money transfer in Europe to sort of accumulate customers very quickly. They're also adding other features that very heavily slant towards millennial audience, whether that's free crypto, whether that's a cryptocurrency exchange or a free sort of no-fee brokerage. Adding these services in order to acquire customers to eventually become sort of banking customers of theirs. And we see a few other companies vying to be sort of new challenger banks in the Europe as well. Just talked about Credit Karma a little bit, notably sort of now moving into other areas, whether that's tax filings, mortgage as well. So we're just seeing this as a theme, and we expect this to continue as well globally as a trend. We're also seeing lines start to blur. As I mentioned, we're seeing a lot more companies add checking account products or banking-like products. I think the first wave of fintech was enabled by APIs, by sort of focus on a single product line, sort of digital marketing, digital branding, so Plaid and other companies who have helped enable that. But now we're starting to see a new set of companies sort of add banking as a service using services like Stonecastle or Green Dot and others to at least try to see whether consumers are interested in becoming bank customers as well as sort of core customers of their savings app or other products. I think this will be an interesting test to see whether consumers are actually interested in these products and become sticky customers as bank and checking accounts typically are. So in 2015, just to sort of recap here, we highlighted how banks are being unbundled by startups, and this was a graphic we put together that became pretty popular. And what we noticed was that emerging fintech companies generally didn't attack incumbents head on. They focus on a specific vertical, whether that's small business lending, whether that's brokerage, whether that's a certain line of insurance. And so we've seen this play out pretty heavily in the last 5 to 10 years. But I think given where we are, we're now starting to see at least an early phase, and I think it's still very early, of rebundling. And maybe not necessarily all of these companies will be the ones to do it, but certainly some are who are started with their core product and are now looking to enter sort of their next act into sort of other financial services and become more of sort of a, not necessarily bank, but sort of taking care of all of a person's financial needs as they grow and mature. So that's sort of the startup side of things. And as we look at sort of the tech giants, I think Amazon has always been a key focus for a number of reasons. There's no shortage of rumors, of course, of what Amazon might do in financial services. If you look at the headlines over the last 5 years, Amazon's getting into mortgages, Amazon's getting into home insurance, Amazon's getting into checking accounts, health insurance with JP Morgan, Berkshire Hathaway, and our favorite, Amazon looking to buy Capital One. So there's a lot of rumors of what they might do, and you continue to see these in the headlines. So we actually put together a longer presentation that's on our research blog that we put up yesterday. It's a longer blog post that details sort of a lot of what we talk about today in this presentation. Just basically recapping what Amazon is really doing in financial services today, maybe not necessarily what they might do. Of course, why is Amazon talked about a lot more than other companies? Largely because of the flywheel effects that they get if they were to offer financial services products. If you get a lower debt payments, they can get lower. If they can get you lower debt payments or give you a bank account, it creates a flywheel. You'll technically, hopefully, buy more stuff on Amazon. So a lot of people, focus on Amazon as sort of the core thread in financial services. Of course, in China, this is nothing new, where we've seen Ant Financial scale into really a modern gateway to an ecosystem of financial services. So starting with Alipay as an online payment service, and then as China's sort of mobile internet and mobile payments boom occurred, was actually able to develop a number of different products, whether that's Yuebao, which is today the largest money market fund in the world, taking Smear change from Alipay wallets, now larger than sort of the JP Morgan money market fund, insurance, credit scoring, consumer lending. So this is nothing new. We've seen companies who are first e-commerce providers grow into basically financial services giants today. If you look at the market caps of leading banks, Ant Financial, with their latest sort of private valuation of $150 billion, would rank among those banks, larger than banks like Santander and Goldman Sachs and others. So pretty amazing to see that today as well. And of course, we're also seeing Ant Financial now look to be a sort of a global player, moving from Asia, where they're partnering with local payments providers in Southeast Asia, and then now potentially into Latin America, which we're starting to see early signs of. So those are some of the reasons why I think Amazon is really talked about a lot. So what we want to do is really just give you a view into what they're doing today, because I think it gets muddled a lot with what they might do or where they might be going. So today, Amazon has really tweaked its financial products to suit merchants and customers. You see a number of the different services they offer today. But it really follows their strategic goal overall as a company when we think about their financial services products, whether that's sort of enabling customers, enabling merchants, or just overall just reducing buyer-seller friction on their marketplace. And we'll see how they've iterated and built out different services to do that over time. So let's walk through some of their efforts. Some of the main lines that they're in today are payments, Amazon Cash, lending, as well as a small effort in insurance. So let's start with payments. I think it's important to realize that, like other companies, Amazon's sort of not afraid to experiment a lot around around different products, and obviously, actually, financial services is a good example of that. So this is a quote from Amazon's Pay GM, who mentions that what people don't really realize a lot is that you have to be willing to sort of experiment, and you have no idea whether these will succeed. And I think payments is a good example of that. Amazon first launched its payments product in 2007 called Pay with Amazon. This is the first known payments product that they introduced to the market. In the same year, they acquired a company called Text Pay Me. This was a acquisition that eventually relaunched as Amazon Web Pay. So you could think of this as an early iteration of Venmo, but perhaps was a little bit too early to the peer-to-peer payments landscape, and that eventually shut down. And Amazon Local Register is another sort of, I guess today would be a failed experiment that they operated. Think of this largely as similar to Square. And so they tried to iterate with this. I think merchants were not as willing to use it, perhaps worried about sort of how Amazon might use their data. And they shut that product down in November 2015. And this was which is funny because this is right before sort of Square went public, almost 2 weeks before Square went public. Today, Square stock price is about 6 times where it was on that date. So Amazon Pay has evolved today into a digital wallet for customers, payments network for merchants. They've added obviously the Pay with Amazon button to all their sort of websites and product listings. And so you've seen just an iteration of timeline where they're trying to figure out what might work and what does eventually work for them as well. Today, it's a little bit hard to find how big they are as a service in terms of payments. As of 2016, about 33 million customers across 170 countries. And where we might see Amazon sort of iterate and innovate in payments next is actually on the offline side. So if you look at China, for example, there's a lot of experimentation with offline payments as we see a lot of partnerships taking place, whether that's basically cashierless checkout and others. And Amazon Go is still early, but perhaps might introduce sort of the next set of payments innovation as they think about using biometrics and other forms of technology to make the offline payments experiment more seamless. Obviously, Whole Foods might be a big part of that as well. So let's walk through sort of the next set of products. Amazon Cash, which acts as sort of depository for cash, allowing largely underbanked or unbanked consumers to deposit cash at, say, a 7-Eleven or CVS into sort of Amazon and deposit that into Amazon. We've seen them actually use this in different forms as well. Amazon Allowance, for example, is a kid-friendly solution, which is now under the Amazon Cash umbrella, where you can make purchases using their Amazon Allowance, add recurring funds. And we've also seen them do partnerships in this regard. So Coinstar is probably the most notable one. Coinstar, of course, in 20,000 retail locations, and 5,000 of those now partnered with Amazon Cash, potentially with some expansion in the future. Lending is an area where Amazon has been very public about wanting to be a big part of where they are. Of course, they have a symbiotic lending relationship with their platform merchants, meaning that they use a lot of their proprietary platform data to make these loans, topping this with obviously technology and machine learning on top of the merchant credit data that they have. It's interesting because we've seen not just Amazon, but a number of different platform companies look to better the small business lending experience on their platforms. So not just Amazon, but Shopify, Square, PayPal, also using their own data to offer loans to basically enable transactions and enable their merchants on their platforms. So we're seeing loan volumes now in the billions for these different platforms. And Jeff Bezos has also been pretty public about wanting Amazon lending to be a core part of where they are. He mentions in their shareholder letter that we hope that they can partner with banks. Today they work with Bank of America and wanting to continue to expand Amazon lending. So this is a product that we'd expect to just continue to grow over time. By the numbers, as of last June, about $3 billion in SMB loans across 20,000 businesses in the US, Japan, and the UK. And of course, on the consumer lending front, credit cards are the product that I guess a lot of people would think about. Amazon Prime, for example, offering rewards like 5% back on Whole Foods, and of course, what we might see eventually is the checking account product. Another product that you have is Amazon Reload, which is a reloadable digital debit card for Prime members. And as I mentioned, checking accounts might be where they go next. So talking with different banks like JP Morgan, Capital One, which would be interesting as sort of a next step for them and whether that's something that they do want to develop into sort of a broader set of financial services with a deeper sort of dive into financial services, or whether that's something that they or evolve over time. It's to be determined, and we'll see what they end up doing with that. Insurance is not an area where they're too much focused right now. They do have a product called Amazon Protect, which is a white label in Europe that they do with Assurance Warranty Group. So if you buy, say, an Xbox on an Amazon site, you can use, they make it, it continued with the strategic goals of the company, making it easier to check out. So they offer a little checkbox there for this product as well. And they've also made an investment in a company called ACO, which is a new general insurer in India, potentially with ways to collaborate and explore ideas there in which they might create some new insurance products in India. And that sort of brings us to our next set, our sort of next set of this presentation, which is we believe that Amazon's actually bigger impact in financial services will come from emerging markets. What's surprising, or what's not talked about a lot, is that Amazon's long-term growth estimates are largely dependent on emerging markets, even more so than Alibaba's, for example, internationally, about 2 to 3 times more dependent on emerging markets. So what we've seen is that they've been actually very aggressive in certain markets. So India is a good example of this, where they've been unafraid to really burn cash to grow payments in India. You see some of the revenue expenses here in the last couple of years. And so what they're doing is sort of focusing on high-frequency transactions to boost payments, so offering cashback discounts on services like food delivery, ticketing, travel, and others. Also offering sort of new special one-time perks to get people onboarded onto Amazon Pay. For example, on their 5-year anniversary, they offered a certain amount of cash back to get people onboarded into Amazon Pay as well. And they've also rolled out new features around cash as well. There's still a lot of cash on delivery, and trying to get people to onboard into Amazon Pay very quickly. The other thing that sort of supports this is that if you look at Amazon's investments over time, and they've made actually a number of investments into private startup companies, most of their fintech investments or acquisitions have actually been in India as well. So they've invested in companies in lending, like Capital Float, and payments, of course, most recently in a company called ToneTag, as well as a few others. So that's another supporting thesis here, that they're looking to be very aggressive and probably support the financial services landscape there as it develops and perhaps leapfrogs over time. So just to recap this presentation, really I think a couple things we're noticing is that fintech, at least on the consumer side, is really entering sort of its next phase, in which companies who perhaps were earlier referred to as unbundlers and looking at a certain specific product line are now moving on to sort of the next act, emboldened with millions of users they have on their platforms, with the data they have on their platforms. And so this is something that we're noticing over time. Of course, on the other side, when you talk about the tech giants, Amazon is interesting and they're very aggressive in financial services in India, like in emerging markets as well. But I think as it pertains to where they are now, it's important to focus on just the core products and thinking about how they think about it strategically. Of course, that can always change over time as we tend to always be surprised by developments as well. And just to end the presentation, I think beyond Amazon, digital platforms globally are now deciding to make their choices in financial services. I think this has a lot of implications across a number of different markets. We're seeing new partnerships as perhaps, like, for example, travel e-commerce sites deciding on a single insurance provider for a certain partnership, or for example, in Japan, Line Corporation and Messaging App partnering with Nomura on brokerage, or other forms of these different ecosystem type partnerships. And I think there's a lot of implications for financial services companies of how they want to play here, as well as figure out sort of the customer journeys of where people are spending time and making sure their financial products maybe are aligned with that. So with that, we will end the presentation, and we will be talking about banks in fintech a little later this afternoon. Thank you.